So here we are today at 95,000. If we take short rates down, back to zero, I think Bitcoin would be probably closer to 300,000. Now, I don't think they're going to zero, just because the interest rate is a reflection of how much liquidity is being put into the system. And it's a whole bunch of other things, but this is just my back of the envelope guess. We take the 2-year note back down to around 2%. Bitcoin's at 180,000 with nothing else changed. This is the most difficult market to trade of all time. So, I mean, cryptocurrency generally. So I think to put too fine a point on it, you're potentially doing some damage to yourself.
Dan Tapiero opens the discussion by zeroing in on one of the most pivotal questions for global markets. Where are interest rates and liquidity heading next? According to him, the U.S. 2-year yield, currently around 3.69%, could easily drop by 100 basis points, potentially landing near 2.5%, regardless of whether the Federal Reserve explicitly cuts rates or not.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think it's more about where the rates go and where liquidity goes. So given the economic data, the 2-year was at 369. I put a chart out yesterday. I could see it easily dropping 100 basis points. So it could go to 2.5. And whether the Fed cuts or not, I think the market rate will go to 2.5. And I think the dollar potentially could drop another, 5-10% here. I was wrong on the dollar. I'd originally thought it would stay strong. But given the amount of fiscal tightening that's gone on, I think we're going to need a monetary offset to cushion some of this austerity, and it'll come through the interest rate, and then it'll also come through a lower dollar. So the moon.
Yeah.
Well, yeah, I know. I think it's very bullish. I mean, look, let's step back and think about this for a second. Bitcoin where is it today?
Around 95,000 last I checked.
95,000. So Bitcoin is at 95,000. The 2-year note is, call it, 3.7. All right. In 2021, the interest rate was 0. Okay? 0. And Bitcoin was 60,000 at the peak. So here we are today at 95,000. If we take short rates down, back to zero, I think Bitcoin would be probably closer to 300,000. Now, I don't think they're going to zero, just because the interest rate is a reflection of how much liquidity is being put into the system. And it's a whole bunch of other things, but this is just my back of the envelope guess. We take the 2-year note back down to around 2%. Bitcoin's at 180,000 with nothing else changed. So the fact that Bitcoin's at 95 with the interest rate here and the dollar down, only sort of 5% from, the last 6-month moving average is unbelievable. It is super duper strong. I know looking at all the macro variables. So if you have a little more of a slowdown, you have this dollar weakening, you have the interest rates drop, just that alone, forget all the great fundamentals, all the new flow into Bitcoin, flow into Ethereum and Solana. To me, I see everything. Bitcoin is the leader. Bitcoin is the core asset. But I do see the other cryptocurrencies. Solana and Ethereum have gained network effect, but the other ones, are venture products, are venture investments. But this is a whole new world. It's still very early. I put this tweet out last night that got a little heat, but I think it's true. I mean, on mainland China, Bitcoin is still banned. And in Europe, I would say Europe is still pretty hostile to Bitcoin generally. I mean, it's certainly not open. So you have 2/3 of the entire world GDP from an economic perspective, from a wealth perspective, they're not really supportive. And the US is. So I don't know. It's like, imagine if we had the other 2/3 of the world actually like being supportive. Where would this thing go? I just think 95 is a great. It's a much stronger price than people understand. I think within a year. I mean, I hate this is the most difficult market to trade of all time. So I mean cryptocurrency generally. So I think to put too fine a point on it, you're potentially doing some damage to yourself. I think 180 is very reasonable within the next year, based on the macro, based on the micro, based on developments, in the digital asset world, growth in, DeFi and RWAs, stables, all those things. They have a flow over effect. I don't believe that it's just Bitcoin and then everything else should be zero. I think everything feeds off each other. And so I've never seen interest as high in the space ever before. And now we've got a US administration that is frankly like downright bullish and pushing for growth, pushing for regulatory clarity. And, with our funds, I've invested in 23 companies that are growth stage companies in the space, companies generally making sort of 40, 50 million in revenue or higher. We have, I think, 3 to 5 companies that could be public this year. And so from my perspective, I think, let's say within a year, I really do believe that the way the US becomes the crypto blockchain capital of the world, which is what Trump wants, is to get the more developed, respected, polished companies listed in the United States. I think it's very important. I know, I think eventually all things of value will be put on a blockchain. I think that's maybe 5-10 years away, but equity is not going away. Equity, the concept of having equity and being a shareholder of a company that produces revenue in this digital asset ecosystem, that's not going away. I think we have a chance now to become the single place where every crypto business comes public. And I'm speaking my own book completely, but I believe this from the founding of my fund. This is what I've always thought.
If you're looking for explosive growth metrics, look no further than stablecoins. Tapiero notes that just 4 years ago, they were virtually non-existent. In 2023, over $10 trillion in value was settled via stablecoins. That type of growth, from $0 to $10 trillion in 4 years, is exceedingly rare. It's a clear indicator of strong product market fit, real-world utility, and increasing adoption across institutional and retail channels alike.
X the tariff, bumpiness, I would have said yes. The tariff bumpiness and some of the uncertainty brought on by the government policies, Doge, and the aggressive nature of them. I think it just backloads it. I think it goes. I don't think the number goes down. It just gets pushed off a few months. And they've announced a lot of these companies that we own, Circle and eToro. There's been talk about Figure. Kraken's been in the news for early next year. So I think that these companies, they're making hundreds of millions of revenue. There's a backlog of companies that should be public because of the bear phase that kicked in 22 and 23. But the reality is this, and I say this often, I don't know anything with a 99% degree of certainty, really. But I know one thing, with a 99% degree of certainty, within the next 5 years, Coinbase will not be the only large public crypto blockchain company in the world. And that's what it is today. Can you imagine? We've got $4 trillion of value sitting in the digital asset ecosystem between all the cryptocurrencies, all the companies. And we have one company, Coinbase, that has a market cap of 60 billion. That's it. That's public. The public, I think, wants to own cash flowing businesses that are in this space, that are active in all these various areas. I mean, stable coins alone, just think about this. 4 years ago, we're essentially at zero. And last year, there was $10 trillion of stable coins settled. So I don't know, if I'm an investor out there, and especially an American investor, and I'm looking for growth, I'm thinking, how many things go from 0 to 10 trillion in 4 years? Like, not a lot. And I think the vibrancy and the dynamism in the space, I think there's huge demand for it from, public market investors. And so that's why I don't really see, you slow this thing down, but I don't see any, diminution in the interest. I know I'm a little ahead of the Fed here. The Fed hasn't changed their posture publicly yet. And I think that the US 2-year note, which is the most sensitive indicator to US macro data, is leading the federal funds rate. So the 2-year note yesterday hit 3.69, and the funds rate the funds rate's over 4%. So I think the 2-year is leading it down. And I think over the next 6 months, we could, definitely see the Fed cut interest rates. And it's because there's a lot of data like this underneath the surface that is responding to uncertainty, concerns, that the tariffs may end up being too severe, right? And economic data can be shaped by expectations as much as by actual data, if you follow what I'm saying, right? Like a CEO can say, I'm confused by all the things going on in DC. Those 2,000 people that I was planning on hiring, well, I'm going to hold off. I'm not going to hire them. And if all those CEOs say that at the same time, it actually has a tremendous impact on the underlying economy, and that's called reflexivity. And that's the famous concept that George Soros first wrote about in the mid 80s, called in the Alchemy of Finance book. And most macro trading is essentially a process of interpreting reflexivity before it kind of kicks in.
He ties this into the concept of reflexivity, the idea popularized by George Soros that market sentiment can shape reality. If CEOs begin to freeze hiring or delay investments due to Washington uncertainty, this alone can create a slowdown, even if the data isn't yet showing it. Understanding this psychological feedback loop is crucial for macro traders. And right now, Tapiero believes reflexivity is in play, and the Fed will ultimately be forced to cut rates in response to growing unease under the surface. Please like and subscribe.